Hey guys, welcome back to the channel. This is Future Trading with Mike, and today I want to do a quick video on a topic that some people have questions about, and that is knowing how to spot high quality market reversal trades and being able to trade them like most experienced professionals in the market. So when we see, the banks, institutions kind of making their moves, whether it's taking price to a next level, or breaking higher to make a new high, or breaking lower to make a new low. What to expect, how to kind of follow the motion or movement of price action to be able to spot market reversals. So knowing how to spot them when you are, at trading during the day and you see price maybe breaking to the upside, making higher highs and higher lows, and all of a sudden it pivots and then starts doing the opposite, moving to the downside, and then you have some level of support beneath us to where we know price could be a high probability area where price could probably halt at and turn and start making a direction back to a move to the upside. So basically you have price making higher highs and higher lows, and so kind of trending to the upside, then it folds to kind of pull back, so you get a greater pullback for price just to turn back around and move back to the upside. So appreciate everyone tuning in this morning. Today is actually Sunday. The market doesn't open up until the Globex session is this evening, 6 p.m. Eastern and 5 p.m. Central. And then we'll be back to trading tomorrow, looking at the markets again. And everyone that follows the channel knows that I trade the ES futures, which is the E-mini S&P 500, which is a derivative of the major index, the S&P 500. So it is one of the stock index derivatives. So anyways, let's kind of go ahead and get into the video. But before I do, I always want to thank everyone who's been currently following the channel. And please, everyone, make sure you drop a like if you like the content of the videos. And if it's your first time viewing, hopefully we can get you and gain you as a sub or subscriber to the channel, because this is a channel where we talk mostly about futures trading, primarily the ES futures, like I said, the E-mini S&P 500. And we have a Discord community set up over at Future Trading with Mike, which if you look down below in the description portion of the video, you'll see the link to the Discord. So join that as well. So join the channel here on YouTube and join the Discord. So let's go ahead and get into the first example we'll talk about and take a look at in reference to spotting a high quality market reversal that will help us get into a trade when we spot them. Okay. All right. So what you see here is, of course, the market. Anyone that understands market structure, you're going to be able to quickly identify what's going on here, and that is the market just making higher highs and higher lows as we kind of trail to the upside, kind of trending to the upside. So if I was to take a trend channel tool here just to look to see what's going on or has been going on, you can see within this session here, even into July the 7th, so that's July the 6th, July the 7th, and probably even going further back, we can see it. The market's just making higher highs and higher lows, even though we have some significant or decent sized pullbacks. It's still trending to the upside, right? Okay, as of right now. So, and looking at that, we kind of already the market's painting a picture, and this is the part I talk about being able to read market structure, knowing what the market's doing at any given time, being able to look at it before you start trading to kind of building a direction in your head, saying and speaking to yourself and saying, okay, the market's making higher highs and higher lows, so I want to kind of position or myself or structure myself to be able to take trades to the upside. Once we see price kind of making this move, we see the setup coming about, and we trade our strategy, sticking to the trading plan, right? All right, so in this case here, I want to show you an example, like I said, in market reversal. So price is moving to the upside. It is making higher highs and higher lows, okay? So we're going to take this off now. Now that we understand the direction in which the market is going, you could use this tool. It's just a trend channel tool. You find it on the tool section and in the trader. But anyways, so it's making these higher highs and higher lows, okay? Now, typically speaking, when we start to see market trending in one particular direction, the so-called gurus out there will always tell you to trade the trend, follow the trend. Trend is your friend, right? Well, that could be the case, but we as smart traders that are following smart money, meaning the money that the institutions, the banks are injecting to the markets, and we want to be able to follow their price movements or follow their, pretty much how they trade. And you can see that, paying close attention to market structure, paying close attention to the volume profile, being able to see where lots of buying or selling took place in the market. Just kind of seeing, areas, if you look at the volume profile here on the left-hand side, areas where a lot of transactions took place, or, a lot of buying or selling took place. And that's why the volume profile is so powerful, because it pinpoints or allows us to see areas within the market where, positions were put on, trades were put on, money was put into the market. So, all right, so with that said, we can see the market making a high here, pulling back, making a higher high here, higher low, and just moving to the upside. And then it changes direction towards the close of July the 7th, which I believe that was Thursday, I believe. Yeah, Thursday. So the close of Thursday, towards the close of the session, what does the market start doing? You can quickly look at this within just a moment, second, and start to see prices starting to make these lower lows and lower highs, chopping back to the downside, right? Okay. So, but at that point there, we got to ask ourselves, is the trend changing? Is the tide changing? Is it moving back to the downside? Well, I'm still in my mindset, long bias in a sense, because if you look at the higher time frame, you can still see the higher time frame and still point to the upside direction. All right, but this is the part about the beauty about being able to have multiple time frames and being able to scale down, because you can kind of see and take what I call short-term trades, based upon just short-term trend changes, or how the market's trending on lower time frames. Even on here on the 12 range chart, we can see the market moving to the upside, making higher highs and higher lows. But it's pulling back, right? Still, there's plenty of opportunities to take shorts, even in a trending market where the market's going long, even though most gurus will tell you to follow the trend and trade that way, okay? But, you have to be able to kind of, trade based upon what the market is doing, what it's showing you, okay? It's painting that picture like I always say. But in this case here, I also wanted to show you today how to spot a market reversal on primarily on a pullback to be able to go long again. Okay, so this is basically, like I said, this video topic is how to spot high quality market reversal trades. Okay, and pretty much trading like the pros do, like the institutions do. Or I should say like the pros, people who aren't even traders, who aren't even are traders for banks or institutions, hedge funds, or whatever the case is, just professional, experienced traders that have large size accounts, being able to trade them and see how the market is moving, just in small retail traders being able to trade it just like the pros. Okay, so here's the thing. Price is moving to the upside. It pulls back. Okay, now what we're looking for is, an opportunity to go long, but we have to be able to clearly identify a level or an area where price, when the market started accumulating buyers, and buyers stepped into the market and started pushing the market higher. So if we look at the opportunities within the market where the market made, just started making these higher highs and higher lows, even in a choppy environment here, the market then pushes up, pulls back, and then we get all of this, pretty much buying, all this aggressive buying back to the upside. I mean, even though it kind of took its course of kind of pushing up, pulling back, it was an accumulation of buying as the move started moving to the upside here, breaking through resistance right here. So we had this high here, it pulls back, accumulation of buying. Even though the buying process was kind of slow, moving sideways, the market consolidated, and then boom, we get a bang to the upside with price pushing higher. So the pullback right here, when the market turns around, I call this a pivot. It starts pulling back pretty much. This is a decent pullback before pushing higher. We're starting to look for areas to where we can pinpoint an entry to go long. So basically looking for a market reversal, even though the market is starting to break structure back to the downside. Okay, still biased, I'm still long in a sense, even though I can look for opportunities to go short once price starts breaking structure, but because of the higher time frame, say the 60 range chart is still painting that picture to the upside, my mind is still long biased. Okay, so here it is. Price pulls back to this area right here. Okay, starts moving to the downside. I'm saying, making lower lows and lower highs, chopping to the downside. So we have to look for areas where there was a lot of accumulation of buying, where the market started pushing higher. So my eye immediately starts to look at this area right here. Look at this area right here. Okay, but I just want to show you this example here. Where price came down to this right here, this low right here. I'll mark this with this right here so you can see. Made this low right here. Okay. So we'll blow it up a little bit. All right. So then I look over here and I see this big swing to the upside. Made a high here, low here, made a higher high, right? So then price pulls back to this area right here. within this swing here, this big swing, what do we have? We have whether it's what I call supporting swings. Price making higher highs and higher lows within a bigger swing, right? Well, each one of these little swings is like a supporting swing of anywhere where price could bounce at and turn around and start moving back up to the upside. So price pulls back, okay? Pulls back to this, pulls, starts to break lower, okay? All right, within this swing here. So the market makes a low here. Now it doesn't really come down and start tapping into the area what we call demand, even out of the supporting swings here. It's kind of pulling right back to the area of resistance here, which I call the mouth or the mouth of the opening of the swing here. But it pulls into the swing, okay, touching base at the resistance areas of some of these supporting swings right here, okay, out of this bigger swing. Okay, pulls into it, all right, pulls back to it, boom, it's right here. You can see it hitting the top end or of these swings to the upside here out of this bigger swing. Okay, so price retraces back to that area. Okay, as it touches base there, we see price pause at. Now, one thing to also be mindful of too, that this is even a greater area of confluence because we have the 70 level, which 70 level is a hidden pivot level as well as the 40. So most people kind of stick and focus around like the round numbers or the half numbers, but also, pay attention to, well, you can if you want to, but I'm just telling you that I pay close attention to the 40 and 70 round numbers as well. Everyone tends to, I hear traders trade other levels as well. So it's 40 and 70. If you go back and kind of look at the market over periods of time, you'll start to see where 40 and 70 areas, especially trading the stock indexes, where you'll see the market will have some type of reaction at those levels. Okay, so price retraces back to this area right here, which this area is just resistance in a case. Okay, if we're trading off a demand out of a supporting swing, where we'll be looking to the the inside of a supporting swing, so price pushed up here, pulled back, and then it broke higher somewhere down in this area down here. Okay, but price didn't come all the way back down there. It on its move to the downside, it broke through this little swing here, it came down, hitting the resistance areas of these little supporting swings to the upside, comes back. Okay, then this is the key. When we start to see price, when it pauses and it doesn't continue pushing lower, okay, then you start. What I do is I start looking at a lower time frame, a 4 range chart. Okay, especially when I see price close, not making another red candle to the downside, closing lower, and then it turns around and I start to see this, say, a green candle start to form to the upside. Okay, that's when I'm starting to switch over and start to look at my my lower time frame, my 4 range chart. Okay, to see if there could possibly be a reversal setup that may take place at this area right here. Okay, like I said, we have confluence with this 70 round, excuse me, the 70 number as well. Right here you can see, okay, 70 sitting in this area right here. We're in an area where there was a lot of buying accumulated. It will market pull back here and then it started buying. Consolidation right here where buyers started putting on positions. You can take a look at this and kind of just tell what's going on right here, and then the market shoots up like I said. So now that we're here, market's pausing, I start to see that green candle start to form to the upside. I'm starting to look over at and we're at a 70 area of confluence, 70 level. I'm starting to look at my lower time frame, my 4 range chart. So let's blow that up. And this right here is the same area right here where I just showed you off the 12 range chart. All right. Now what to look for in a setup that you want to pay close attention is to where you want to start to see price breaking structure. The same thing we want to see when prices tap into an area of supply and demand. Sometimes price won't always pull back to that area of supply and demand. It will make touch an area of resistance, and then it would just blast off back to the upside in this case right here. So the thing about it is on a 4 range chart, what we're looking for is now that price is not pulling any lower. It is at resistance. Okay, well, is this going to be a reversal at resistance? That area I just showed you off the 12 range chart. But we want to be able to see price. What do we want to see? Same thing I talk about all the time. See price breaking structure. Okay, back to the upside. It just don't take the trade. The moment it gets down here. All right, I mentioned I saw on the 12 range where price halted, did not want to push any lower. There will be some resistance there, and then you start to see a green candle start to form to the upside, and price starts to break structure. Well, we look at the 4 range chart, and it's definitely showing us that. This gives us clear or more confirmation of what price is really trying to do. See, it hits here, okay, which is that area of the 12 range, pushes up, okay, made a little high, pulls back, it's made a lower high. Now it's pulling to the upside. What does it do? It breaks structure right here on the 4 range, okay? It breaks through this area where price is swinging to the downside. Not just that, but it made a high here, a lower high, and now it's breaking resistance right here, pushed to the upside, taking out resistance here as well. All right? So what are you looking for? You're really looking for at this point here is that now we've identified that price is on the move to the upside by breaking structure on a 4 range chart, right? All right. So the moment it does that, what do we want to see? We want to see price come back to here, right? Somewhere in this area if it does. But sometimes it may just pull back to that area of resistance and take off. In this case here, it pushed up, it pulled back a tick or two away from the area of resistance, and then it starts pushing higher. Now this is where you have to make good judgment and kind of take a look to see if, if you want to jump into a trade, because sometimes price may not, when price comes back right here, that was 38.73, say for instance, and this is 38.72 3/4. That's like half a tick. Half a point, whatever the case is. It comes back the moment this green candle closes above green. I'm into a trade, definitely into a trade to take it to its next level to the upside, which is this area here. So this is to me could be a short term or market reversal or reversal in the market to where I can get into a position long and take it back up to the upside. And so then at that point, then once you get into this trade, if price pulls back here, if you take it right here at resistance, like I said, not all the time will it pull back to this area of demand. Now, will it come back to that area? Could it come back to that area sometime in the future? Yes, it could. And we'll see here in a moment if it does. I'm not 100% sure. But at this point here, now that price has broke through resistance and pulls back to resistance, if it cannot and does not pull back any lower, then I'm long, okay? Once it closes the green back to the upside, because then I'm looking for price to do what? To possibly come up to the next level and take, my first profit target out. Hit my first TP. So if I'm in this trade here at 38.74 off the 4 range chart, now this is off the 4 range, it will, the next level up is around 38.77. So that's about a 3-point move right there. And then what you can do is that if you take your first contract off here, if you're trading multiple contracts, is that each time price starts breaking levels, taking out levels over here and making structure to the upside as well, pulling back, then you just move your stop loss up behind the bottom end of that swing level. So price broke through this area here, pull back, okay, then pull higher. Now there's a possibility to pull back right here. Of course it does. So when it pulls back, if it does, the moment it breaks back to the upside, you move your stop loss right up here, okay? Then the same thing here. As it continues making moves to the upside, pulling back and then breaking higher, pull your stop loss back below the last swing level that was formed, moving to the upside, okay? And that's how we kind of can follow suit with moving our stop loss to kind of stay in the trade longer. You don't ever know if the markets, if this is actually going to be a true market reversal to where it just starts trending back to the upside, taking out, I believe, what was the high sitting at? Let's take a look at the 12 range again. Where we at? Yeah, 39.14 area. Okay, if it's going to come back up there and take out that high again, just to break up and make another high, which it did. Okay, but we're just focused on what it's doing currently at this time here. So I believe that area was right here. Okay, so but this is the area right here, and eventually it does. It just keeps pushing higher. It does pull back, and then it starts moving higher to break that 39.14 area. But here's the key. The question was, all right, will it come back to an area of demand? And it does. If you look at the market, this is where I was talking about. This is where the reversal took place at. Okay, looking at it from the 12 range, looking for it to come back to an area of resistance. Particularly, we're looking for supply, but it didn't happen. It rejected that resistance, and then it started pushing higher, which was a market reversal because the market was in a position back to the origin to the upside, and it made a big pullback or retracement. Excuse me, just to push higher. Okay, so it pulls back. It pulls back to when it does finally make this move to the upside. Okay, so it makes a leg to the upside. It's pulling back. Okay, now at this point here, it's making a lower high on a big move back to the upside. So it starts to swing back up to the upside, taking out resistance here and making higher highs. But on the pullback here, the question was, does it come back to demand eventually? It does, but it doesn't. It does not do that for about another hour. Okay, so shortly after the market opened up, primarily at 10 o'clock, is where the market pulls back. So this is around 8:50. Market pushes up. This is 9:45. Pulls back here. So 10 o'clock right here is where the market actually taps back. It comes back to the area of supply. All right. So when it comes, excuse me, demand. When it comes back to this area of demand right here, all right, what are we looking for? Well, it gets back to the area of demand. Here at this point here, if we look at it on the 12 range, let's see if we can identify it here, right here. Okay, this is where it happened at. Pushes up, pulls back. See, when it pushes up here, what's it doing? Taking out structure. So this is the area of demand off the 12 range. Now we're going over to our 4 range again. So you could have got into the trade here on when the market reversal happened. It pushes higher than 12 range, taking out structure, making higher highs and higher lows. Now what do we want to do? Here's the leg I was talking about in yesterday's video. This is the 50% area. You really don't want to take a trade there unless you get clear confirmation, clear rejection off the 4 range. If you're trading off, from the if you're marking zones from the 12 range chart, you want to make sure that you're getting that clear confirmation on the 4 range. So the market pulls back. In this case here, this is the primary area of demand that I'm actually looking for price to come back to, because this is where the move on the trend or market reversal started to happen right here when it started pushing back up to the upside. Pulls back. This is the area here. Switch over to your 4 range chart. Okay, when you start looking over your 4 range chart, we start to notice where we at. Excuse me, I'm back on the 12 range, 4 range, right here. So this is the area I just showed you. Same area on the 12 range. Okay, what are we looking for now? We're looking for price to break structure. Okay, looking for price to break structure when it gets there. So here it is. When it comes back, pushes up. Okay, breaking through this area of resistance right here. Okay, on the move to the upside. Okay, but this is the area it needs to take out right here. Okay, this swing to the downside. So pushes up, pulls back, starts to make higher highs and higher lows. The moment it comes back to like an area right, this area right here, or the lower portion of this little leg right here, that's where I'm getting interested at. And we're looking at the volume profile, and we can see, I always say, buy the lows, sell the highs. In this case here, we want to go long, so we want to take the trade going long at the lower extremity of the volume profile. All right, the moment it breaks structure, taking out this area here, I'm going to move to the upside, and we see structure breaks, meaning breaking through resistance, making higher highs and higher lows. It pulls back. Okay, now here's some areas you can start to mark to take a look at. Yep, did it come back here? Not quite, but that is one zone. This still is the lower portion of this leg right here. Okay, the next area I would pinpoint will be this area right here. Does it come down to the area? Boom, taps right into it, to the tick. The moment that green candle turns green, you take your trade going long. If you got in right here to close of this candle, this green candle right here, blow this up a little bit so you can see it. That's at 38.76, say three quarters or a half. From there, you take it back up to the tops, okay, and that's going to put you around 38.81 and a quarter, okay. So, and you're at right here, this next level to the upside, whatever the case is. Now you can hold the position. You've got multiple contracts on. First TP, first contract out at around 38.81. Allow the second contract to kind of, follow behind and take it up to the next level, which would be right here. It did pull back right here. So where you put your stop loss? There's 2 ways you can put your stop loss at, right? A few ticks below the entry point at the close of this candle where you got in it, or put it right below the supporting swing right here, which would be right here at 38.74 and a half. Some people put it right below their entry. The last candle where they entered it, that candle where they entered at the bottom end of it. Some people put it right below here. Sometimes I'll put it here, just depending, which chart I'm trading off of. But if I'm trading off a 4 range, most times I'll put it off the supporting swing right here at the bottom end, a few ticks below it. And then on the higher time frames, if I'm trading strictly off of a 12 range, off the 12 range, but I'm using my higher time frame to mark my zones from, like my 60 range, then I'll put it below this candle here. So it just depends, okay? But yeah, that's how you look for and identify those areas or spot them when looking for market reversals and being able to trade them. So that's pretty much all I want to leave you guys with, showing you how to trade a market reversal. when prices, kind of trending to the upside or downside, because it could be, if you're trending to the downside, of course, you're looking to flip it and do the opposite. But that's pretty much it. Hope everyone enjoys the rest of the weekend, and I will see you guys in tomorrow's live recorded session on Monday. Take care.